Most Canadians have an opportunity to take off 5 years from their mortgage. Now, there is no simple way you can do this. You have to have the funds to put down on a lump sum payment. But this is something I recently did for my principal residence. And it took about 5 years off my mortgage. And more than anything, the interest it saved me just in the remainder of the mortgage term, but over the life of the mortgage was eye-catching. And this is a topic that doesn't really get a lot of conversation here on YouTube, but I feel like it's really important right now, especially with mortgage rates being higher than they were in 2021 and 2022, and a lot of people having upcoming mortgage renewals. My name is Tom Storey. In today's video, we're talking about the mortgage lump sum payment. If you enjoy these types of videos, make sure you get subscribed, like this video. And if you want to book a call with myself or my team, you can do that in the first link in the description. Should say off the bat, I'm a real estate agent. This is not financial advice. You should talk to your bank or your mortgage broker or your accountant about the specifics of what I'm talking about in this video. What I am going to show you is the math behind it. The numbers, I'm going to give you an actual example, a prompt that you can use, whether it's ChatGPT or Gemini or many of the other options out there, to ask them, based on your mortgage situation, how much money you could pay down, how many years could come off the mortgage. Now, you're going to have to ask yourself, if you have the funds available to potentially make a lump sum on your mortgage, well, should you even do it? And I'm not here to say that you should or you shouldn't, but I think at least it's worth understanding the numbers. Because if your mortgage is at 3.5%, but you can make 6.5% over here on something else, then why would you pay it off? That doesn't make any sense. Let your money work for you over here. But if your mortgage is at 6% and you don't feel comfortable putting the money elsewhere, well, maybe this is something that you should look at. So the way that mortgages work is when you make your payment every single month, how they differ from private loans or lines of credits is that when you're making your payment, you're also contributing to the principal, which is the initial balance of the money you paid. You're not just making an interest payment. And mortgage payments are split up into interest and principal. And I think a lot of people look at their total payment and just go like, well, my mortgage costs this. But if you haven't looked at this recently, please do take a look at your most recent mortgage statement and how much did you pay in principal and how much did you pay in interest? Because the principal is essentially going back to your property. That is your money. Unless your property is going down in value, then that impacts that as well. But the interest is money you're not getting back. That's essentially rent. You can look at it any way that you want. Now, you have different ways of paying off your mortgage faster in Canada. It can be that you're paying it off, weekly instead of monthly in terms of the payments coming out, where that, over a period of time will pay it down quicker. You can change your monthly payments to pay off more of the principal if your lender allows you. All of them have slightly different rules, but the biggest one that will make the biggest difference is the mortgage lump sum payment if you have the funds available. And it doesn't have to be the maximum amount. If you have $5,000 sitting around and you don't know what to do with it, you should at least look at, well, how much could it take off your mortgage in the interest or the amortization? So these mortgage lump sums, typically, this isn't always, but typically, banks will allow you to do somewhere between 10 to 15% of the amount of the mortgage per year. And the big thing with these mortgage lump sums is 100% of it goes to the principal, not the interest. So I'm going to show you a really easy prompt. We're going to use ChatGPT today. I'm going to give you an example, but what I want you to take away from this video is run these numbers for yourself. Understand, is this something you should consider if you have the funds available? I'm very well aware that not everyone can do this, but if you're in the position to do it, I think you should at least understand how the numbers work. Let's jump over to ChatGPT and I'm going to go over this prompt that I have put together for you. Okay. So I will put this in the description of the video as well, just so you can copy and paste this and put in your information. So for this specific prompt, what I'm asking it is, I'm looking to do a lump sum on my mortgage. My bank allows a 15% prepayment every year without penalty. Now, that number there, you're going to have to change. Whatever that number is, just get the maximum. Normally, you can go onto your online banking or find out. You can call your bank. You can go into a branch. You can find out what this is. Then you want to put in the balance. So the balance of my mortgage, let's just say in this example, is $450,000. My current interest rate, you're going to plug in your current interest rate. For this example, I'm using 4.5%. And then I put until March 2027 because that is the interest rate for this term. So it's the interest rate term, but not the total amortization for the property. And then I've told them how much of my total mortgage is left in the amortization. And I've said there is 22 years left. Okay. So the main things you have to plug into this prompt is what's the percentage of prepayment that your bank allows you to do? What is the balance of your mortgage? What is your current interest rate until what date? And how many years and months or days is left on your amortization? Then I'm going to ask it, can you let me know what my maximum lump sum would be and how much it would save me in this mortgage term plus the life of the mortgage and the years it would take off the total amortization? So we're going to ask ChatGPT, we're going to plug that in there and we're going to see what it tells us. But it's not going to give you everything in this first response. Okay, so let's see what it gave us here. So here's the breakdown of your mortgage payment. So the maximum lump sum payment allowed, which would be 15% of that 450 in this example, obviously yours would be different, would be $67,500. Now keep in mind, you can pay off $1,000. You can pay off $500. It doesn't have to be the maximum amount. It's just good to understand what that number is. Put in whatever number you feel comfortable with. And then it would give you kind of what your monthly payments currently are. Now, there's two ways of looking at this. This is where you have to talk to your bank, your mortgage broker to figure out these exact costs. But there are sometimes when you do a lump sum that your amortization would stay the same, but your payments would just be less. And then there's another way to keep the same payments, but then the amortization really comes down on the mortgage. That's personally what I did. I like that better. Sometimes you don't have a choice depending on the bank that you have your mortgage from. But let's go through the rest of this. So what it's saying is that without lump sum, so if you just continue to make your payments over the life of your mortgage, you would pay about $260,000 in interest over the rest of the 22 years. Now, that is assuming that your interest rate of 4.5% will remain the same over those 22 years, which we know that will fluctuate slightly higher or lower, but it's still interesting to know. But if you made a lump sum, you'd pay about $165,000 in interest. So over the life of the entire mortgage, you would save about $93,000, which is huge, right? Like when you really think about this, that one lump sum of $67,000 over the life of the mortgage could save you $93,000 if you continuously have that 4.5% interest rate over that 22 years. But here's the big thing it also does. If you keep the payment the same, your amortization would shorten from 22 years to about 17 years, cutting about 5 years off the total life of your mortgage. And now it's asking us, would you like me to also break down how much of those savings you'd see within your current term? So that doesn't mean the life of the mortgage, but just until your current interest rate is up. So let's say, yes, please. Okay, so for the current term that you have, what it's showing until March of 2027 is that the interest that would be paid without the prepayment would be about $31,000. The interest paid with the lump sum would go down to $26,000. So you're saving roughly $5,000 just over the next few years in interest by doing that. And then the balance at the end of this term, which would be $430,000 without the prepayment, would go down to basically $300,000 and roughly $60,000. So you're saving $5,000 in interest, but the balance is also going down by about $72,000. Now, it will continue to ask you questions here. Do you want me to also show you what happens if you keep making a 15% lump sum payment every single year? Now, I fully recognize like most people just I don't have it. I don't have the funds to do 15% every single year. I can't pay off my mortgage that fast. But when you start running the numbers, it's very eye-opening to understand the difference you could make. I'd like to reiterate what I said at the beginning of this video is that I'm not saying you should or shouldn't do this. There's probably other places that maybe your money could be better spent. I've also had this conversation with like friends and older people that don't have mortgages. And I've had people give me different opinions. They're like, you know what? I thought paying off my mortgage would feel great. It makes no difference. And I have other people that are like, I wish I had taken this more seriously because I'm now in my 60s. And even though my mortgage is small, it's like the fact I still have a mortgage is just like infuriating to me. So I don't know if this makes sense to you, but I'm going to drop in the description of this video the exact prompt that you can ask AI to get these numbers. On some online banking as well, depending on where you have your mortgage, you can actually just pre-plug all this in and they'll do the calculations for you as well. Hope you found this valuable. I want people to make smart decisions with their money, whether you decide to do this or not. Hey, at least you walk away from this video knowing that it is an option to you. And the amount of money you can save on the interest over the long term is honestly eye-opening. Thank you for watching this video. My name is Tom Storey, and remember, home is where your story begins.